Good morning, everybody. How's everyone doing today? It's Friday, last day of the week. You guys know what that means. We'll be diving into some Friday rules in just a moment. Let's give it a little second here and let some more folks trickle into the show. Good morning. Good morning, good morning, good morning. All right, who's kicking us off here? John Cardozo, nice to see you with the all caps morning. Nice to see you. Thanks for getting us going with some good energy here. We've got Michael Cobble. We've got Katie Baby, Mickey, Daniel, Chloe, Maybe in Trades. We've got John Taylor, Fred, the Lioness is here. Market Chat. David Ball is in the building. Ketchup Kings. Sammy Sams. Who else? Johnny D, Tony D, Kid Ray, Badger, good morning. Who else? Paul, Mora, Shroth, happy Friday to you as well. B-Dog is in the building. DP. Fancy French Wood. That is an awesome name. Davey Daytrader is here. Good morning. We've got Mudaman, Jihan Park, D. Alex, the Lioness. We've got Siege. Good morning, Siege. Nice to see you. We've got DB, Gregory Rulo. Of course, it's classic. We've got K-Dog, Capitalist Dog. David Mastriano, good morning. Orlando, good morning. INF the based homie from Canada, Cipriano, VR, JL, Fuskai. Everybody's here. Good morning, everybody. Nice to see you all. The Dirty Bird is in the building as well. That name just cracks me up. Dirty Bird. Nice to see you. All right, very good. Let's get this thing going. Let's get this thing going here. We have Friday rules in play. Friday rules would tell us that today is a Friday, so first and foremost, you must... the magic tool isn't working this morning. Uh-oh. No worries. It is now. Okay. Good. All right. I have my crayon. It's back in order. All right. Little setting was not properly set on the other screen. But anyways, now that the magic crayon is back, what I was saying was that we have Friday rules in play, which mean we can't do anything that would jeopardize our weekend here. We do not want to have feelings of malice, hatred towards the market as we move into the weekend. We don't want to be hanging out with friends, families, whoever you decide to be with this weekend, even if it's yourself. It doesn't matter. You don't want to be having the internal or external dialogue saying, I really shouldn't have sized up on Friday. I thought I was going to swing for the fences and turn my week around, and I just dug myself a deeper hole. I hate the market. Next Monday you come back to the desk and you have that feeling like, oh, I know I slipped up on Friday. I'm going to try to be good, but something emotional maybe happened, and boom, it turns into a downward spiral, right? It turns into a big downward spiral. So do not let that happen. Absolutely do not let that happen. Today is a day to make sure you end the week on a high note and not on a low note. So if you're green, stay green. If you are red, it's okay. Take reasonable trades. Remember, folks, that Friday rules don't tell us to not trade at all. They just say be very selective and be responsible with your risk, reward, position sizing, all that good stuff. So extra cautious on a Friday, right? So if you're green, stay green. If you're red, it's okay. You can still take decent setups, take the setups that present themselves, but don't size up just aiming for a green close on the week. So with that out of the way, Friday rules are out in the air. We've put them out into the universe. Let's take a look through our fundamental stuff, then we'll dive into the charts as we always do. Friday, June 23rd, 9:45 a.m., we will be getting the PMIs, both manufacturing and services. So just keep in mind, there may be a little bit of volatility about 15 minutes after the market opens. In terms of the implications here, manufacturing is still in a contractionary phase. It's sub 50, and services is intended to come in above 50. So this doesn't necessarily mean, good. I guess to some degree, the market will always have an interpretation, good versus bad. But remember, services is the sticky inflation. Services inflation is sticky. And seeing that number at 53 versus the prior 50, it was only 1 point lower than the previous, or the forecast is for 1 point lower. You really want to see it come in closer to 50, right? Not necessarily contracting big time, but definitely a move towards neutral, right? So anyhow, that's some brief commentary on the PMI, and once again, that will be at 9:45. If you're a trader and you don't really care about this stuff, just keep in mind there may be a blip of volatility 15 minutes into the day. If we look forward to next week's going to be important because the big one's coming out, right? There it is. Core PCE month over month comes out Friday, so a week from today, June 30th at 8:30 in the morning. That's going to be very, very important. The Fed will be watching that very closely, and we will likely see some maneuvering in what the expectations are, aka the Fed tracker tool and the Fed fund futures. Okay, so next Friday looks important. Other than that, everything's kind of status quo. Durable goods is fine. Powell speaks Wednesday at 9:30, right at market open. Not entirely sure what that one's about. Do they have a briefing up yet? Due to participate in a panel discussion titled Policy Panel at the ECB Forum on Central Banking in Sintra. Okay, so that answers that. It looks like there will be a policy discussion, probably some Q&A in there, and the market may see some, that probably does lead to a volatility event. So I would just be prepared for that. That's Wednesday at 9:30 as soon as the market opens, unfortunately. It's not like we get the first couple hours of the day and then he starts speaking at 1 in the afternoon, 2 in the afternoon, or whatever. So Wednesday next week may be interesting, but the big deal is definitely going to be Friday at 8:30 down here. Let's take a look at some stock-specific headlines here this morning. Top-line figures are all red straight across the board. We are opening towards the lows of the prior day's session, down about 38 basis points, 53 basis points, 65, and the oil is down big, right? Oil is down big time, down almost 1.5% this morning, with the 10-year also falling. So that is that. Continuing along here, what do we see? The big headline reads, stock futures fall as Wall Street heads for a losing week. They're not technically wrong. It has been a pullback week, but if we look at a weekly chart, maybe we'll just do this as a fun exercise in a moment. If we look at a weekly chart, one red weekly bar and a sea of green bars, not the end of the world. Not the end of the world. This is the pullback that we're still dealing with, still managing. There's no flip to a downtrend yet, okay? What's going on? We've got some birthday wishes in the chat. Is that what I'm seeing over here? Whose birthday? David Ball is saying that it's Foo's birthday.
So you should give that 10 over to Fu, not me. But I do appreciate it. Here we go. Everybody sing happy birthday to Fu. Here we go. 1, 2, 3. No, I'm kidding. I'm not going to make your ears bleed this morning, but please wish Fu a happy birthday in the chat. Appreciate you being here, and hopefully you have a fantastic day. Great weekend as well. All right? Cool. Back to our headlines here now that we've taken that moment. Yeah, please no from Mr. Kern there. Yeah, I won't make your ears bleed with the singing this morning. But let's continue with our headlines. All right. So what else is going on here? Energy shares plunge more than 30%. Wind turbine worries. So that kind of pairs nicely with oil being. Actually, it does not really pair nicely with oil being down. You would think oil would be up. But anyways, what else is going on? More gains ahead of this data center shock that thanks to incremental AI opportunity. So Bank of America is still bullish on the AI stuff. And, it's to reason that there's going to continue to be more AI opportunity that arises as it fully integrates into society, right? ChatGPT and all that stuff is great, but you guys don't forget that the real AI opportunity isn't just like having this Q&A bot to answer you on the web, right? That's by no stretch of the imagination is that like peak AI. Peak AI is far beyond that. So just have that in the back of your head if you're an AI non-believer, like, oh, who cares that Google can now answer me in chat format? It's like, missing the point. All right, is there another birthday as well? Excuse me. Is there another birthday? I'm seeing another tag to Knox251. Happy birthday to Knox251 as well. If they are in the chat, happy birthday to you. AI has a discrimination problem in banking. The consequences can be severe. I'm not entirely sure what that means, and we're not going to dive into that headline here, but you can check that out on your own. I-95 reopening less than 2 weeks after the deadly collapse in Philadelphia. That's great news. Infrastructure strong, or at least, obviously the bridge was not strong. However, it's good that was able to be repaired. I've seen some crazy videos out of I believe it's China, where they build a full railroad station over the course of 24 hours. That's crazy to me. But anyways, what else is going on here? Stock specific stuff. Buffett. What do we see about Buffett? Charitable foundation giving exceeds $50 billion, more than his entire net worth in 2006. Interesting. The Titan, as we all found out yesterday, unfortunately did implode. All casualties on board, confirmed by the Coast Guard and Honorable Mr. Ballard there, who's a local legend around my parts. So anyhow, unfortunate to hear. It's unfortunately the risk that you take when you go to an unforgiving landscape like that. So I guess, we can all just have some... It's not even like it impacts everybody here, obviously, but to the families, obviously, they get some closure, at least knowing that is, in fact, what happened, and they're not just floating around down there still. Anyways, Wells Fargo downgrade to Under Armour. What else is going on here? Pay attention to Raytheon in terms of defense. What else? Stock-specific stuff. Comment from Powell here says smaller banks will likely be exempt from higher capital requirements. That came from the testimony the other day. GM is sunsetting the Camaro. We talked about that the other day. And that's it, really. That's really it. Yes. AI winner could be in trouble after the latest investor day. Not entirely sure what that is. Just an arbitrary data node head. All right, so nothing crazy out of the headlines this morning. I would say, if anything, the AI opportunity is still very much so alive, according to Bank of America. That's really it. Let's take a look at the earnings calendar. We know that there's CarMax before the open here. That's KMAX, I believe, is the ticker. It's a K, not a C. And that's it. Earnings are dying down. We're going to start to heat back up as we move into Q2 earnings down the line here. Down the line, next month, early next month. Okay, moving over to what we do best. And I will put up our beautiful little banner there. I will make sure that I do not need the reminder from the chat. And we'll continue. So, lots of birthdays around here. Goodness. MH Mahinit, I believe I'm saying that right. Mahinit had a birthday yesterday. Birthdays all around. And June, I suppose, is the month to be born. June. Investor Day was NVIDIA. Thanks for the update, Timmy D. Appreciate that. Okay, so let's get down to business here. And no one cares. No one cares about what? Big Spark. No one cares about what, man? It's all love here in the chat. But anyways, ES, what's going on here from a price action perspective? We're certainly looking at still a 4-hour uptrend. 4-hour uptrend is intact. And we are, of course, we're looking at this pullback. So yesterday was looking pretty convincing, I would say, based on opening on a little bit of a gap down, testing the lows, and then closing at the highs. And that activity right there, it's kind of what we outlined in the pre-market prep yesterday, right? We were speaking about, let's sweep the lows, let's look for the retracement back into range. It would make sense. Here's the FOMC low as well, right? So to me, that move there really made sense. That move made sense yesterday. And the close at the high would have given me the confidence to say, okay, let's look for some continuation into the Friday session. But obviously in the pre-market, that's kind of been put out the window. It doesn't mean that we're just outright bearish. Doesn't mean that we're looking for the market to tank and go to hell in a handbasket. But for the most part, this open is not the most thrilling thing to see after the performance from yesterday. So with that out of the way, let's still acknowledge that we can produce any 4-hour high or low above the breakout point here, which, as we discussed the other day, is roughly 43.50. So as long as we're above 43.50, I'm not overly concerned yet about a trend change on the 4-hour time frame chart. Is the head and shoulders starting to become more pronounced with a failed move here? Could this possibly be a lower high? Absolutely. Absolutely. And we could trade from here to here. But when and if we get to this breakout point, my thinking cap still says, hey, let's still be looking out for hammers, double bottoms, inverted head and shoulders, the whole 9 yards, right? So that to me is still the game plan. We are still very much so moving from lower left to upper right, and that would define an uptrend sequence of higher lows and higher highs. Let's take it on down to an hourly time frame chart, see what else we can learn about the price action in here. The hourly certainly starts to suggest more of a neutral trend now, right? With equal lows. If you want to look at it from this zoomed in perspective, you've got equal lows, you've got a double top back here. We're underneath the neckline of the double top, and we've certainly been producing a sequence of lower highs. Remember that this is a holiday session here, but for the most part, you could do something like this, and that's not totally wrong, right? So we do have lower highs, and we also have equal lows down here. So if you wanted to start being a bit more neutral on the market, I wouldn't call you crazy for that, especially after what happened yesterday and the anticipated open. Once again, not full transparency here. The only positions I ever carry overnight are my long-term IRA, old, rolled 401k stuff, whatever that is doing, right? And the IRA is doing, that's the only overnight hold I have. So I don't have a position here, and I'm not, not underwater on something coming into this, but this is disappointing. Like, in terms of thinking about trend sequencing, this was disappointing, right? We did exactly what we wanted the market to do, broke the lows, or well, technically this is happening in the pre-market, right? We broke the lows, rallied back into the prior day's range, repairing the poor low, and closed very strong at the highs, even with an afternoon liquidation break here at like 3:30. If you were watching in the Discord, we said, hey, liquidation break, big negative 1,000 tick. We retraced 100% and looked good. Looked good. Obviously, not the case as we head into this open. So I suppose the main reason I'm focusing on this so much is because I need to make the mental shift personally, and maybe you do as well, but I need to make the mental shift from saying, hey, we had a really solid close yesterday, to saying, something's not really right here if we're opening basically on the lows after the performance yesterday. So just carry that forward, right? Instead of being outright bullish, looking for a reversal, because that's what yesterday's daily bar would have implied. With that now in jeopardy, opening at these lows, I think it's worth making, taking stock, no pun intended, of your mental, thought process about where we are. All right. So that's kind of what I'm getting at here. And it's something that I need to do myself, which is why I'm spending so much time vocalizing it on this morning's stream. So with that out of the way, yeah, you're right. You're absolutely right. The hourly doesn't look all that fantastic here, and this certainly is starting to suggest more of like an H pattern, lower high in play. If we break the equal low, we know we break the FOMC low, and we can look for that 43.50 to come into play. So that's certainly a valid thought process, right? That's certainly a valid thought process. We know that that's the next major downside target. Before we move down to the 15-minute time frame chart, let me also show you where this is coming from. Remember that the SPY, the S&P as a market overall, broke out on the Friday, not the Monday, right? It got over the prior resistance shelf on the Friday, not the Monday. So that high of Friday's session, which was an inverted hammer, is this micro gray bar that you see in between the two ranges here. And that level is at 43.66. 43.66. All right, so first downside target if we do get an equal low flush, and there is a nasty move today giving back the FOMC sort of low. Remember that this is thin structure, and we should retrace towards that 43.66. 43.66. About 30 points below where we're currently trading. 30 points. All right. So that's your downside, and once again, being very, very aware and mindful of what happened yesterday versus the implied open, that's key for this morning session, okay? Let's take a look at the 15-minute time frame chart and understand what's going on here. Obviously, the 15, without a doubt, is in a downtrend. We are moving from upper left to lower right. So smaller time frame downtrend, absolutely. But just remember, if you're looking for a 4-hour higher low, then the smaller time frames will at some point have to flip into a downtrend. So that 15-minute trend is certainly there. The hourly trend is borderline there as well. Okay? So 4-hour trend is still up, but we know we're in a 15 and potentially 1-hour downtrend. And if we look at the price action here and just stay objective, let's ask ourselves the 3 questions. Let's do what we do literally every single morning. That way we don't get overly biased one way or another just based on yesterday's price action, right? That should be, I should have retitled the stream like, let's be mindful of yesterday's price or something along those lines, because that is really the key to making it out successfully on the right side of the trade here this morning, right? Being able to disconnect from what happened here and the bullish bias that we had into the close, coming into the new day with a clean slate saying, hey, things have changed in the overnight, clearly, and we need to reassess the probabilities, right? So here we go. Question number 1. Where are we opening in relationship to the prior day's range? Here's the prior day's high, here's the prior day's low. We are not opening on a gap outside of the prior day's range, but we are opening substantially removed from the prior day's settlement, which would have been up here. We're opening in range, but at the lows. In range, but at the lows. So it's neutral to bearish. Neutral to bearish. Whenever we have an inside open, meaning inside the prior day's range, we always ask question number 1.5. And what does 1.5 ask? Well, where are we opening in relationship to value area? Value area high, 44.1950. Value area low, 44.0350. We are currently opening beneath value, obviously, down here. So that does strike me as a more bearish implication as well, especially when you consider the fact that value area high yesterday is the same level, same exact number, as value area high from the Wednesday session. So value was unchanged yesterday, even though the close was strong, right? So what we would have looked for if we were going to remain bullish into today's session would have been an open above the value area to build out value higher on today's session, implying some forward progress in the upward direction. Obviously, with the open being down underneath, that is off the table as a situation. And we have to, it's not technically off the table. Something miraculous could happen. We could straight shot out of the open. We could consolidate up here into the close. It would be wild. But you can clearly see that the probabilities of that happening are much lower at this point in time. So I think it's worth being honest with ourselves in terms of saying, okay, are there trapped buyers up here at the highs? Are there trapped buyers stuck up here at the highs? Remember that one of the most powerful indications the market can ever give you is a gap in the opposite direction of the prior day's price activity. We're not gapping technically. We are still inside the prior day's range, but you have to imagine that anybody who is positioned long and holding overnight is underwater with the open literally at almost the low of the prior day's session. Anybody who initiated a new money long up here looking to hold this into the future, not opening in a friendly manner, right? So that's an important psychological takeaway here based on question 1 and 1.5. Really worth diving into on this morning session, considering everything that we have in front of us here. Question number 2, let's keep this train rolling. Where are we in relationship to the overnight range? Overnight high actually made a higher high outside of range, but that was promptly rejected in the waterfall sell that took place shortly thereafter, and we are basically sitting on overnight lows. All right, so let me go ahead and adjust the overnight low to its rightful position. We'll do something that looks like this. And we're opening smack on it. Perhaps going to make a new lower low by the time the bell actually rings. Perhaps we'll open on a gap down. I can't tell you exactly, but doesn't look great right here. Certainly doesn't look great right here. All right, so question 2, we will put a big down arrow here. It is bearish, but remember, it still sets up decent risk reward in the opposite direction. Remember, risk reward and probability of trade actually working are two totally separate things. So what would I want to see if we were going to use this for good risk reward? It's the same concept of what we discussed yesterday. You would want to break the low, test the FOMC box in here, 4390s, this general zone, and then you would want to rally back into range with a higher low. And now it's game back on to say, okay, we've yet again collected the stops. The sellers could not make it much lower. Now let's see how far we can go in the upward direction. And now you start to build out more of a balance range down here. And we treat it exactly like balance, right? We will look for a rotation to the top of the range if this unfolds. If it doesn't and we get a lower high, now there's the opportunity for a trend to develop in the downward direction with highs and lower highs. Okay? So that's kind of what question 2 leads us to believe. And once again, as I was speaking to you, we did in fact make a new lower low, and we're threatening a gap down at this point in time. So let's continue to just walk this thing on down. Break on through to the other side, anybody? A little bit of doors this morning. Break on through. So we're breaking on through. We are on the other side, opening on a very minor gap down at this point. It's not really substantial enough to say that we would want to trade for gap fill outcomes, right? There's no range here to actually trade for. So that's kind of off the table. And whenever that's off the table, we know that we're just looking for the resolution of the prior low of day. We're just simply not there yet. All right. So question 2 has been answered. Question number 3, last but certainly not least. What is going on with the overnight inventory? If we do something like this, there's your prior day settlement up here. How much time above, how much time below? It's very obvious that we're virtually 98% net short. 98% net short, and the reason that we could say that so confidently is due to this sell and the rebounds that were taking place in here. Never retraced a bulk of any of those moves. We're sitting on brand new overnight lows as I'm speaking to you also. So 98, almost 100% net short. There's certainly not much long activity going on here. And that is that. All right. With Jim. Yeah. INF, I saw the suggestions of the Powell's favorite Grateful Dead songs. Man, those were gold. Those were gold. Instead of Uncle John's band, Uncle Volker's band. Come on. Classic. Classic. Man. That stuff fires me up. I love to see it. So anyways, the 3 questions in conjunction this morning, what do they leave us with for the open on a Friday? Well, I think we want to keep our wits about us. I think we want to come in with an open mind. And I think for the most part, these are the situations I will be watching for. Here we go, right? If we take out, or if we open here and test a little bit lower, the FOMC low, remember that this gray bar represents the rough area of the FOMC low. There's nothing that's ever going to be exactly precise in the market when it comes to big, broad, sweeping levels, right? So if we can test this box and not necessarily be producing weakness, aka just clear lower highs underneath, I should redraw this, right? This box, anything kind of goes in here, but if we start forming lower highs underneath or consolidation underneath, concerning. Absolutely not what we want to see. If we try to resolve it higher, meaning it looks something like this on the open, we're testing lower, there's not a whole lot of activity lower, we do this, then we pop into the prior day's range, that's the situation where I would say that we have a sweep of the lows, and now we're trying to find price acceptance back in here. We will treat it as a balance, and once again, what should the target be? If it's truly a look below and fail, we will look for the top end. First target would have to be value area high, where we saw that consolidation and roughness yesterday, right up here. So that's kind of my thinking for the open here out of the ES. I want to see, how does this box resolve? Do we find buyers in here, or does price action completely kick out? And do we see that rotation lower towards the 4360 area, 4366, right? That's the main focus for the ES on the open. If you're looking at it in any other way, I'm not necessarily convinced that it's the right way to be thinking about it. This is concerning. Obviously, now that we're gapping red under green, that means anybody who initiated a long yesterday is dead wrong. They're underwater on the open here. Even if you had the best possible location, bottom tick the low, you're underwater. So excuse me, it would lead me to believe that there's likely going to be some sort of downside outcome first instead of a rally. Now, whether or not that's a correct, whether or not that's actually what happens, nobody could tell you, but that would be my assumption based on what we're opening here. I think that you will likely get folks who tried to position long yesterday panicking out, saying, oh no, this isn't working. We're gapping red under green. I'm going to sell some positions. That would cause something that looks like this. Then our job is to say, okay, do we get acceptance back in the prior day's range, or do we find lower highs underneath this gray zone? Okay? Just to give you a ballpark bottom end of that level there, 43.86, 43.8650, 43.8650. If we're underneath that, undoubtedly lower highs looking for a downside reaction, or further reaction rather, and that would really only leave 20 points, big quotes around only 20 points in the downward direction. All right? So that is what we've got out of the ES. Absolutely, Josh Martinez. We are going to get to the NQ right about now, actually, now that we're finishing up with the ES. We always talk about the NQ as a secondary after the ES. So any questions about this before we move to the NQ? I want the chat to be very on board with what we've just walked through in terms of being able to change or at least come into the day with an open mind, coming from a strong close after breaking and rejecting these lows, right? We gapped underneath them, we tested lower, strong close up here. Can everybody understand why we want to come in with a clean slate mentally, emotionally, in terms of our viewpoint of the market as we're opening down here? Is everybody on board with that? I just want to make sure, because again, when I look at this, I'm like, great, that's a strong close. That makes me believe, hey, there could be some more upside out of this market, when clearly we're getting differing activity here. So we have to detach from that mentality just a little bit, right? We need to detach from that just a little bit, okay? Coming in with a blank slate, understanding what's going on here. Markets continue to push lower. Is there some commentary from the Fed going on right now? I didn't see anything on the calendar, and of course we have PMIs at 9:45, but that's that. All right. Cool. I'm seeing a lot of, Bostic is on the wire? I see. All right. Fed zombies. Yeah, Bostic's on the wire. I see. Okay. All right. So we'll leave it off at that. I'm seeing a lot of people who are on board with the mentality that we have into the open here, which is a good thing. Bullard, Bostic, whoever it is, they're speaking now. So Europe not really doing so hot with the 50 basis point rate hike. Obviously, that came in the other day. Europe, much more of a recession declared already. Okay. All right, so we'll leave it off at that. Everybody's on the same page. We all understand what we need to do in terms of managing. We want to activate the overnight low. There we go. In terms of managing our expectations after a day like yesterday, right? That's really what it boils down to. I haven't said this in a while, but it's all about me, 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 me. This is that's way too many peaks of an M. But it's all about me, 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 right? Manage expectations. Not literally me, but manage your expectations on an open like this after a day like this. All right? So let's move along and take a look at the NQ. Once again, if you can control the way that you view the market, that's really important. It's really, really important that you're seeing it clearly here on the open, regardless of what happened yesterday. Okay. That's out of the way. NQ, here we go. Josh Martinez. NQ is on the screen. 4-hour time frame chart is what we're looking at. First, as always, do we see anything overly concerning in terms of a trend change here out of the 4-hour? I still have to say no. On the 4-hour chart, I'm not seeing anything overly concerning for a 4-hour trend change. The one possible thing could be if this sticks as a lower high set in here, but we're still dealing with, the opportunity for a higher low. Big time from there to there. All right, and we know that the line in the sand is the breakout point from back here. So there's still some wiggle room to find a 4-hour higher low. I'm not convinced that the 4-hour trend is in jeopardy of changing yet, but yes, it would be irresponsible of me to not at least acknowledge that we do have an opportunity for a lower high set already. All right, so that is on the table. Let's move along and take a look at the hourly time frame chart. This is where things can certainly start to look a little bit worse in terms of deteriorating into a downtrend. You have your double top, just like we talked about in the ES. We're underneath the neckline. We've got lower highs from here and here. We've got lower lows from neckline to here, here to here. We are opening not on a gap down, though, here. in the NQ, right? NQ is not a true gap down like we just saw out of the ES. A little bit more resilient, opening inside of the prior day's range. Let's go ahead and take a look at the 15-minute time frame chart. Now that we understand, actually, before we go there, let's point out where the structure is coming from. Let's go extended hours off. It's going to make it crystal clear for us, okay? So here we go. On the upside, this is very self-explanatory. This is the level. Prior high of day basically went right to it. It was the lower portion of consolidation from the Tuesday session after the holiday. It was where we sold off of from the Tuesday session, right? So that's upper resistance. This is really just a magnet. In here. This 15,125 area, it's just a magnet. You have prior structure, sure, in here, but look at how we've just chopped through it. All right, obviously the intended open is to be below that level, so if we do see a rally, that should just be thought of as a magnet. I wouldn't really think of it as like, big time. Maybe you could think of it as resistance. I don't know. To me, it's just more like we can aim to go there, but I'm not necessarily convinced that you should be initiating things there, right? If you're looking to initiate here, and maybe this is what you're referring to, Josh Martinez, in terms of the channel, if you want to treat this as kind of a channel, yeah, that's exactly in the midpoint, and there's not a whole lot of edge in the midpoint of a channel. Your edge exists literally at the edge for breakout or mean reversion, and at the bottom for mean reversion or breakdown, right? So these are some of the levels that are just I want to describe before we move to the 15-minute chart. Obviously, your lows are coming in at the FOMC low and the gap fill reversal from back here. Also, the high of the Monday breakout. Remember that this NQ broke out on the Monday, not the Friday like the ES, and that's your prior low of day. We're still opening slightly above that, so we've got that going for us, but we're opening kind of in here, no man's land. All right? So now that we understand the structure that's at play on the hourly and where these targets are coming from, your breakout level, daily line in the sand, I know it looks skewed here. That's because of the contract change happening there, and the extended hours data will account for that, right? But that is slightly below us. Let's go ahead and throw that back on so we can understand now. You can see intraday, 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 right? So that starts to come in at 14,850, 14,850. All right, so if we break the FOMC lows, if we break the gap fill reversal lows from back here, we have thin structure to retrace, and the target is 14,850, 14,850 on the downside, okay? So we've covered up and downside levels. We understand where we're at in terms of the sideways channel that we were just referring to, if you want to even think of it that way. I'm not convinced it's a sideways channel yet, but maybe something in here, right? Let's take a look at the 15-minute chart. Let's stay objective, and let's ask our 3 questions and stay on point for this morning's open. So we're going to have to do something very similar to what we just walked through in the ES. We had a very strong day yesterday. Let's first look at yesterday in relationship to the Wednesday range, right? First and foremost, we open on the gap down yesterday, and we rally into the prior day's range. But even further than that, on the first rally attempt, we go straight to the target we were discussing in yesterday's stream, right? 15,125, the pivot top, and it was also value area high. Then we get a pullback, and the pullback respects, if you wanted to think of this as an intraday double bottom, higher low double bottom, the pullback respects the neckline of that pattern. And also, if I were to put a VWAP on this, you would have seen that the pullback went right to VWAP. And we continue to trend higher into the close with a very strong close at the highs of the trading range and also at the highs of the Wednesday session, right? So just like in the S&P, yesterday's daily bar had a ton of bullish implications. Very, very bullish implications based on the close, based on the higher low being above VWAP, based on not getting hung up at this resistance point. Because remember, if we continue to remember the history of the market here, this was a key inflection point because of this reason right here. Tuesday's low of day was the exact rejection into the Wednesday afternoon session. The fact that the market yesterday could blast through that no problem really did strike me as a bullish indication. So we have all of these bullish things taking place, yet we find ourselves opening weak in the lower bound of the prior day's range. So big mentality shift needs to be made here on the open. Big mentality shift needs to be made. We can't really look at this market and say, okay, everything's fine and dandy. We should be continuing off to make the equal highs, right? There's much more work that needs to be done at this point in time. And that level of congestion that we were just referring to on the hourly chart is here, right? You can see that we chop through it in the overnight. It's the target from back here as well, right? So now that that's above us, that potentially acts as the target, potentially is a place for the market to go. But when we get there, all bets are off. All bets are off. The risk now is because we are opening lower than the prior day's close, prior day's high, equal highs, right? That now turns into the lower high on something like a 1 hour emerging downtrend. Okay, so this is my thought process on a complicated open like what we have here this morning. This is not going, like, the more I think about this open, the more I think it's probably going to make fools of both bulls and bears alike. The more I think about it, the more I think that this morning's open has the potential to make a fool out of everybody. All right? And if you can just understand that and approach the market from that perspective, then I think you'll have reasonable expectations that, I'm not going to be surprised if we rally to this gravity point that we were just referring to and produce a lower high. I'm not going to be surprised if we test lower first, start to threaten the break of the FOMC low, then come back up into range, right? If you start thinking like, I'm not going to be that impressed whatever the market does, that's the mentality where you are likely the least, or I should say you are the least likely to get hurt in terms of what's going on there, right? If you come into the market with the expectation saying, the market has to do this, it has to put in consolidation here, and then it has to break out, and that's your expectation, and then you're surprised when the market does this and then puts in a lower high here, that's a recipe for disaster. One of my mentors in trading is, unknown to him probably, Peter over at Shadow Trader, right? He just did a webinar last night, how I trade weekly options, whatever. He always said, if you are going to be surprised by the market, you're going to be hurt by the market. If you can decrease the surprise factor, the element of surprise that you experience from the market, then you are not likely to get hurt because you are prepared for that situation and you know exactly what to do when and if we get to a specific location. All right? I think that being open to those surprises, especially on a morning like today, is going to be that's what's at the forefront of my mind right now. You probably hear me talking about it, in more detail here, the emotional aspect of this open compared to any other stream that we've done this week. And I think it's jarring to come off of this and to come into this. So be prepared for that. It's one of the main things I could give you on this morning's stream. That's one of the main things that we could sort of talk about. All right. So anyways, NQ game plan, 15-minute time frame chart, 3 questions we're always asking. We are not technically opening on a gap down. We are opening underneath the value area that is bearish. So this is 1 and 1.5. Question number 2, overnight low down here, opening towards the overnight lows, not even close to the overnight highs. That is bearish, but once again speaks to risk reward probably being favorable, using that as a stop, right, for some kind of thing that does this. And then question number 3, let's once again call a spade, virtually 100% net short, right? 100% net short. Minor activity above promptly reverses strongly in the downward direction based on the Fed commentary. Bostic, Bullard, whoever it is making some wake in the market right now. So question number 3 would tell us, there's an opportunity for some inventory correction. It's virtually net short. Now, this, again, is not opening on a gap down. So some folks who are long from the early stages of yesterday could potentially still be feeling good about their position, right? And then any sort of rebounds here will potentially keep them happy. So that's something to be noting. It's not necessarily the strongest indication, obviously. Anyone here for the afternoon move, and the consolidation is underwater. So that's once again why the midpoint of this range really becomes the issue at 15,125. So to give you some situations for the NQ, once again, be open to lots of them just based on the psychology at play here. If we test lower, I wouldn't be surprised if you see some of this sell off as overhead supply. You want to look at what the reaction is, your prior low of day, as well as this. Remember, it's the gap fill reversal, it's the FOMC, and it's big structure, right? Big pharma, no, big structure. 15,000. What am I saying? NQ, 15,000, right? 15K. If we come into this area looking for support there, first and foremost, simply noting the 4-hour and hourly attempt at remaining in a trend, or at least neutral trend with the equal low. If we can't hold it, lower highs underneath get attractive for the downside. We talked about that on the hourly just a moment ago. If we come back into range after breaching, sweeping, whatever you want to classify it as down here, coming back into range, higher lows, this perhaps is going to be the best long trade on today's session. The best long trade that I could even come close to envisioning this morning out of the NQ would look something like this. We open here, and this is important, right? We sweep all of this. We get all these stops hit down here. Come back into range, higher low. This is the obvious target, value area low. I mean, look at the thin structure on the first initial rally from yesterday. There's nothing stopping the market there. So I think that this is probably the most powerful long trade on the day's session. It requires testing lower first, finding acceptance back inside of the prior day's range, then retargeting the value area low. That to me, it's almost a repeat of yesterday to some degree, but with the understanding that the threat, of course, is this, right? That's a bigger threat today with more people underwater from here. It's a much bigger threat today. But if we can avoid it, if we can produce the higher low above, if there's definitively something higher low back above this zone, 15,000, that to me is the best trade, the best long trade that could be presented here. The reason why this is not attractive, right? If we just rally to here first, once again, this is your hourly magnet. There's no reason to be initiating a position here unless you're thinking short, which I'm not, as you can probably tell from my bias. I'm not thinking short there. I'm thinking neutral in the midpoint of the range. It's not really a great place to initiate. You want to be initiating here for the rejection. Maybe there's the opportunity for that to be the lower high, but wouldn't be my first thought. Wouldn't be my first thought, given everything we know about this market right now. Okay, so that's it. NQ we've covered up and down. Who do we have here? I'm seeing some stickers out in the chat. We've got John Taylor. Thank you for the €10, and I'm glad that this roadmap and market knowledge is making its way nicely over to your neck of the woods. Alan with the 499, and then someone joined as a super supporter and then promptly redacted that message. So I can't say a shout out to whoever that was, but Alan, thank you. John Taylor, thank you. Hopefully everybody is getting decent value in terms of thinking about the approach of this morning's open. So NQ, we've covered it up, we've covered it down. Let's take a look at our Russell. What's going on with the rut? We've got 9 o'clock on the clock, 9 o'clock on the clock, and we're doing all right on time. We're doing A-okay on time. It's worth spending the extra time on this versus making sure that we hit everything in the core list on a Friday. All right. So Russell, there's your range. Obviously, we've broken out of it. We've talked about this ad nauseum. So from again the weekly time frame perspective, or maybe even daily time frame perspective, there's an opportunity here for a higher low. As day traders, we have to be aware of that. But of course, this waterfall sell here has retraced a bulk of the thin structure. We've been eyeballing that. Unfortunately, like what I am not a fan of the Russell right now is the fact that they did it in the afternoon, or I shouldn't say afternoon, but after hours. They did it in the after hours. So sure, we got the breakdown of the head and shoulders pattern back here. We finally firmly resolved that lower with price acceptance underneath it yesterday. But all of this stronger retracement out of the small caps has really come in the after hours session. So unless you've swung the IWM short, I believe, who was it? Verified News. Verified News. Are you still long TZA? If you're long TZA, then congrats, man. That's probably up quite nicely for you right now. But yeah, it happened in the afternoon. So afternoon, I keep saying that. After hours. Get it through your thick skull, Matt. It happened in the after hours. So unless you were swinging something, no exposure to that move, right? Let's take a look at the hourly time frame chart. Verified News confirms with a solid yes in the chat that he is up nicely on that move. So kudos to you. Congrats. What do we see going on here? Hourly time frame chart. I mean, much more clearly in a downtrend. We've talked about the head and shoulders. All of that's fine and dandy. We're underneath the neckline. Good to go. We've got lower highs. Great. Once again, where did the bulk of this move happen? After hours. So very difficult to come into this one thinking that we should be getting more downside, especially that we've already retraced a bulk of the thin structure. Let's go ahead and drop it on down to a 15-minute time frame chart and just kind of understand the dynamic in play here. This is blue because it does represent the thin structure that we were dealing with. And it technically ends down here closer to 1820. The top of the weekly range is closer to 1840, 1835. So that's an interesting little discrepancy that's worth pointing out, right? We may not retrace all of the thin structure. We may stop here. So with that kind of out of the way, what do we see in terms of the three questions? Obviously, you're dealing with a huge gap down in comparison to everything else that we have looked at so far on this morning's session. Let's go overnight low to its rightful position. So massive gap down, and this is a gap of serious magnitude out of the Russell. Remember, in the ES, we're typically looking at 20. In the NQ, we're typically looking at 100. In the Russell, I really didn't even have a benchmark threshold for this, but this certainly is in that threshold range, and this is roughly 20 points as of right now. I mean, 20 points out of the Russell compared to 20 points out of the ES. We're talking about something priced at, roughly, let's use rough figures here. Don't attack me for my math. Roughly half the value, if you just want to round to, 2,000 and 4,000, RTY and ES respectively, right? So all things considered, it's a substantial gap, right? It is a substantial gap. What does that mean? It means manage expectations out of the Russell, and it means that if this is going to act as a leader or at least a lead indication for the spiders or the Qs or the ES or the NQ, then we might want to just keep our wits about us looking for the gap to fill, right? If that starts to unfold, you probably want to be more bullish out of your SPY, out of your QQQ, out of the ES, the NQ. If it really just starts going sideways and we have to, totally put on the manage expectations hat and say, okay, we'll let it simmer out, we'll let it do its thing, it's not going to help broad markets, right? The fact that this is down so substantially. So that is that. Gap rules are in play here. The three questions would tell us. Number one, opening on a firm gap down at this point in time. No need to ask question 1.5. Gap rules are in play. We'll go through those in just a moment here. Question number two, where are we opening in relationship to the overnight low and high? Obviously much closer to the overnight low, nowhere near the overnight high. That is bearish, but does set up good risk reward for the gap rules to pan out. Question number three, overnight inventory is what? Basically, just like everything else, 100% net short. So let's say, maybe there's some bullish activity back here, 98%. And then we'll drop a little S next to it, net short. That means that yes, we can look for some inventory correction. And yes, we will be looking for a failure of the overnight low. That's key step number one, failure of the overnight low, which would coincidentally, let's think about this for a second, a failure of the overnight low here from the sellers would just imply that we are looking at a weekly opportunity for a higher low, right? Remember that this is the top of the weekly balance. So failure of the overnight low, long through the opening print, that is number two, right? You've got to go through the opening print. We will look for this gap to start to fill and fade in the upward direction. That would be a long. Verified news, you may want to, actually, I'm not even going to say anything in terms of what you should do. You had a position, you had a game plan, you should stick to your plan. But me coming into the day, fresh blank slate, right? Russell, I see a gap like this and I think fade. If it does want to continue, then that's fine. Number two will not happen. Number one will not happen. We will get price acceptance underneath here. All right. So I will leave it off at that for our Russell. I think managing expectations because of the size of this gap will be important. I think that a key inflection point would just be your prior low of day, 1857.10. And the overnight low, which is currently at 1836.50. Those are the key numbers for the Russell this morning. Let's take a look at our ETF versions over on the cash side of things. What's going on with the spiders? So as we just talked about in the ES, right, we're opening on a very minor gap down right now. And what we should always be thinking about here is how can we wait for the resolution of the prior low of day, because the gap rules would tell us there's not enough range here to actually trade for if we need to use the overnight low as a stop. And if there's going to be a very brief drawdown and then tag, you've got to be quick draw McGraw. That's not even worth talking about on the stream, right? So how does the prior low of day resolve is the key question at this point in time. Make note that this is still your FOMC low zone. In terms of the SPY as a level, 434.50 was the number that we wanted to see respected, and obviously we're opening underneath it. So it does open the opportunity. It opens up the door, so to speak, for a lower high below. 434.50 is a key level. 434.50. I'll say it till I'm blue in the face. 434.50. If you think about the price action that's unfolded on the Wednesday-Thursday combination, here, all of that is still underneath the upper distribution from the Tuesday range, right? So bears are making progress in the downward direction, but we still just have to be mindful of the overall daily uptrend that's in play. We're still looking for higher lows, right? Let's not forget that. Daily time frame chart, mild pullback. Yesterday technically was looking good. We need to change our tone with the gap red under green. There's still some areas for potential support, right? We are looking at 431.75. We're looking at the breakout point here, 429.25. All right, both of those levels will be the numbers to watch if we see further downside. Just like we talked about in the ES futures, just like we talked about in the NQ so far, a rally into the previous day's range at this point in the SPY, it needs to recapture 430, 450, then higher low kind of in the prior day's consolidation up here. That's probably the more optimistic long. Why? Let's think about it from this perspective, right? Let's think about it from this perspective. If sellers are truly going to make a stand here, then the trade this morning should be fairly straightforward, right? We should start to target some of these lower levels here and possibly here the breakout level on the daily. So if we don't see that happen and the market does rally into the prior day's range and we are getting price acceptance here, the thing that comes to mind for me is that the sellers were just given two gifts back to back, right? Number one was the gap down on Thursday, and number two is the gap down this morning. If both of those gap downs fail to materialize in the downward direction, I would have to imagine that would imply that there's a weakness from the sellers. And yes, this is indeed just a mild pullback, right? And we will look for an opportunity to go long if we can get a setup higher low over the 434.50, right? So that's just one thing that I'm considering as well. Obviously, with what's going on here, the risk or the threat is still very much so this. What we were just talking about, the optimistic, this is exactly that. It's a little bit optimistic for this open. Nothing about this would imply that, obviously, with the more aggressive, move down into the overnight lows as I'm speaking to you. All right, so SPY, we know our up, we know our down, 434.50. We understand the same psychology from the ES. Our downside level is 431.75 on a pullback, right? Anything beyond that, 429.25, line in the sand. QQQ, let's go back on down to an hourly time frame chart so we understand what's at play here. Zooming in, once again, you'll note that we had a very strong close yesterday that is being undone. So all the concepts we talked about in the NQ still hold true here. Break of this low to test it, and then we come back in with a higher low. That's your most powerful long entry, and your target would be 363. 363 on the upside there. If we rally out of the gates, this is your gravity point up here towards 364.25. Would not look to initiate major new positions there. Maybe there's a scalp short off of it for a lower high to be produced. Maybe. Wouldn't be my primary thought, though. All right, and then downside outcomes that get much worse, Much worse downside outcomes breach 360.75 and produce a lower high underneath this. All right, in which case we will retrace this thin structure and the target will become 357.25. That is your QQQ. Again, the open in here is below the value area. I know you can't see it on this chart, but remember that the NQ value was something like this. We are below value. That is bearish. Okay. So that's done. Let's take a look at the IWM, Russell 2000 and small caps. We just covered this on the Russell futures, right? Obviously, there's your retracement down into the 180.50. The thin structure has been retraced. And if there is going to be an ideal higher low, it's here. We're talking about, remember, weekly implications or something like that. Remember that we had a double bottom here, right? And when we broke that neckline, that's really where the thin structure emerged from. So 180.50 is your number. You can see that we're starting to get some support there in the pre-market. I would just continue to watch it. Gap rules are in play. Failing 180.50, long through the opening print, look to retrace and tag up to your prior low of day, 182.50. This is extended through the lower bound of the expected move, but am I that concerned about it? Probably not. I'll just tell you, no, I am not, because we are moving from contraction to expansion, right? Contraction to expansion. And obviously, with a shortened week, the options market was pricing in less volatility. So, doesn't really strike me as the end of the world that we're through the lower bound of the expected move is basically what I'm getting at. Doesn't seem like the worst implication. All right, IWM has been covered. We have gone through the broad market ETFs. Let's take a look at our good friend Apple and see what else we can learn about some of the names that we trade on a regular basis here. Apple, not all that bad in the pre-market in terms of the damage that's done to the ES. And we'll notice that we're trying to open in the afternoon pullback zone. So Apple, your level to watch, it still remains the same. We never got a higher low above. We just broke above into the close here, is 186.65. It's still the level. So that's your upside on Apple, 186.65. In a picture-perfect world, at this point in time, Apple does not go underneath 184.50. Look at your hourly time frame chart. This consolidation, it can lead to a breakdown if we get and sort of break underneath that bottom. That's 185.75, 185.75. All right, if we technically get below that on this morning session, I would expect a deeper pullback to possibly test 184.50. Now, when and if we go there, note that your hourly time frame chart here on the left, that wants to produce a higher low. It wants to produce a higher low, 184.50, prior structure, prior structure, prior structure, prior structure, right? That is the level for it to hold. If we don't hold there, then this turns into a choppy, sloppy mess, all right? So 186.65, 185.75, 184.50. Those are the numbers for Apple on this morning session. I feel like I'm like reading out the Powerball numbers when I say like those are the numbers for the day. Anyhow, continuing along, Netflix. What's going on with Netflix? We know that we had our double top. Great. We saw the breakdown. Whoa, wrong zoom. We had the breakdown. Great. Yesterday was just bearish consolidation, right? We were consolidating underneath the bear flag from here. The threat, of course, is just a break out of the prior day's range. With the current intended forecasted open being here, I would certainly think that downside is much more likely than upside. If we do get into the prior day's range, neutral. Look at this. Do you really want to get involved there? Probably not on a Friday. You also don't have a clear indication for a long, noting that you are running directly into overhead supply, even if we do make it over previous day's high, right? Yesterday, the opportunity was clearer, or cleaner, I should say, for the double bottom here on the hourly because we had a thin structure breakdown above us. Today, this is important. So write this down on, I don't know, a sticky note on Google Docs, whatever you got, right? This double bottom was in theory going to be easier to play because we had thin structure from the breakdown. The breach of yesterday's high, because we just have neutral consolidation here, is not nearly as tradable in the upward direction because we have overhead supply again to run into, right? So that's the difference why I would have been willing to look for a double bottom reversal here yesterday, not today. Not today. That is off the table for today. You can start to imagine how this over time may build out as a head and shoulders. It's just not there yet. So patience if you're trying to scoop up a daily higher low on Netflix, or otherwise looking at your prior low of day here, 419.50 to act as your number, right? Lower highs below, target the gap close here. All right, that's Netflix. Next up, Tesla. What's going on with Mr. Musk? Strong rally. Thankfully, we talked about this yesterday. Hopefully, you caught a piece of it as well. There's a beautiful 3-bar play on the 5-minute. This is almost too good to be true, so I just got to bring it back up. I mean, if you ever wanted to see a textbook play, put that in a textbook, put it in the museums of technical analysis. Does not get any better than that. Does not get any better than that 3-bar play right there. Okay, so hopefully you caught a piece of Tesla yesterday. Beautiful move in the upward direction. Let's see what we've got on tap for this morning session. All right, so keeping it back on over to what we do here. This needs to be way less. We need like 2 days. Good. All right. So Tesla, where are we opening? Certainly still inside of this, the only range where we've seen a little bit of back and forth. Up here it was waterfall sell. Down here it was, what would you call it? Rocket ship buy. So we're in the only range where there's some consolidation, where there's some price acceptance out of Tesla in here. So I wouldn't really have a bias one way or another. If we can break and higher low over 262.50, that is attractive for upside through the thin structure back here. If we can break and lower high underneath 258.75, then great. We'll say the opposite about the move down below. Retrace the thin structure, 250.75 becomes a target. So Tesla's very simple. Your numbers this morning are 262.50, 258.75. Higher low above, lower high below. Again, very, very clear if you just look at the interactions here. Okay? So don't overcomplicate it. Watch for those two things. Google, what else is going on here? We've got 9:15 on the clock. We're almost to the core list, so we're doing all right. Google, very, very interesting move yesterday. Certainly was not expecting such a clean recapture of 122. I'll be the first to admit that I was personally looking for rejections up here, right through it, hot knife through butter. You can see in the pre-market, a lot of that is being given back right now. So we are technically opening under 122. I don't know. It's this breakdown. I will thank the high heavens once again, the market gods, for giving us that breakdown of 122. Now that it's playing games again, Google at least, this disrespect of the level down here, no resistance there for a lower high back inside of this choppy range, right? So I don't know. I'm not convinced Google is an obvious setup for this morning. If anything, if you want to watch anything out of Google today, it would be staying over 121.25. That's your number. I would have no regard for 122 anymore. There's probably still a reason to respect 120.15, but 121.25 is the level for the bear flag consolidation from the Wednesday session, right? If we're above that, shorts are in trouble if they're not already gone at this point in time. Okay, 121.25 would be the number. All right, moving along, Metaverse. What's going on with Zuckerberg's Fantasyland? What's going on with the Fantasyland over here? Who has? I think based on what we talked about yesterday, a lot of people have odds on Zuckerberg absolutely destroying Elon Musk in a fight. I think that Musk has the weight advantage, but he certainly does not have the athleticism advantage. There's that famous, or maybe infamous, depending on how you feel about him, picture of Elon Musk versus Jeff Bezos on the back of the yacht, right? What's the meme or whatever? Like the girl your says don't the guy your girl says don't worry about versus you. Yeah, that's funny. But regardless, Metaverse breaking the trend line here, big move in the upward direction, giving it back just like everything else into this morning's open. So unfortunately, we don't have like a firm pennant breakout confirmed here. We're just in the midpoint of this balance range that's ultimately formed. So Meta is really a patience play until we can get it back up and over 286.50s, and then the breakdown perhaps gets interesting underneath 278.75. You guys know me, I can't deal with that not being the precise quarter, and I can't deal with this not being the precise half. But those are the two numbers, right? As long as we're chopping around in the midpoint of that, then I would say, knock yourself out, scalps back and forth, all that stuff's good. But there's no direction in that box there. You got to get out of this box for the trend to continue. All right, so 286.50, 278.75, moving along. NVIDIA, what else is going on? Taking a look at NVIDIA. NVIDIA is doing what? It's the same thing as Metaverse that we just talked about, right? If this is a new balance range, there's no indication of a long breakout yet. Yesterday was, decent off the lows. Great. Maybe if you caught that scalp in there, that's fantastic. But if you think about this 421 level, that seems to me to be in jeopardy. I was never the biggest fan of this as a technical pattern, but the diamond top is technically a real thing, right? And it makes sense in theory, right? Because what you have is a high and then a lower high, and then a low and a higher low. If you break that, right, then technically you're ushering in the new lower low. That would just be underneath this 421 mark. Look for the pullback deeper into 411.25, right? So about a 10-point move in the downward direction could be available between here and here in NVIDIA. I would watch out for that on today's session. 421 is your number. All right, we're not really thrilled about upside considering that we rallied and then just all of this has been fading off. All right, so that's NVIDIA. Next up, we've got Microsoft. What's going on with Softy? No surprises here, just like everything else. Back down at yesterday's lows. This one is a bit more interesting because we've already seen the failure to hold up at the top of this breakout point for a daily higher low here. And now this is starting to cement itself as a lower high. We're opening down here, right? So the idea out of Microsoft should probably be to favor short side activity under 334.25 for the rotation down into the previous breakout, 328.65. I would probably have more of a bear bias based on the structure that's unfolding lower high from here to here. If it does want to turn into an inverted head and shoulders, because I know someone's going to bring it up in the chat, remember we're opening down here, so it's going to be ugly. You're going to have to rally and get a higher low over that neckline at 338. Doesn't really seem to be in play based on what's going on here. All right, I would think that the short setup with a lower high below 334.25 is on the table sooner as opposed to the higher low over 338. Last but not least, what an impressive move. What an impressive move. Amazon, wall to wall. Opened underneath our level at, I shouldn't call it our level, but the market level at 125.50, straight through the top of the 127, and once again, If you are watching intraday, let's go to a 5-minute chart. Where was your higher low bull flag consolidation, right? So this 100% very difficult to actually capture the aggressive momentum style move out of Amazon. But where do we as traders get involved on this thing? Couldn't have asked for anything better right there with the hammer in the bull flag, right? Breach the hammer high, trend continuation in the upward direction, stop under the low. You can tighten that up to being underneath the flag lows if you'd like as well, underneath the green bodied low as well. And, this just continued to trend up and away into the afternoon. So great trades out of Amazon. It really did respect that structure, at least with the higher low above. Hopefully you caught a piece. We talked about 127. That one was much more difficult. Tesla was the easier trade yesterday. But anyways, Amazon, just pointing out that, hey, it's working out pretty good there. What does that leave us with for this morning session, right? What does that leave us with for this morning session? Well, we're opening probably the strongest open that we've seen across the board on the breakout yesterday. So as long as Amazon wants to hold up over 128, it's not going to give me a nice round number to put it to. Let's go 60. If we're above 128.60, no reason to really panic yet out of Amazon. If we start breaking down underneath that, that starts to become a little bit more of the concern, right? And even then, it's not the end of the world. Think about the daily time frame chart here. You're looking for a higher low over the breakout point, a pullback that sweeps this flag in terms of the 30-minute perspective, right? If you break those flag lows, 128.60, the level we just talked about, then you're looking for a daily higher low on the retest of 127, right? So I think Amazon has some decent structure here to be trading against. It will be a decent watch for the open. That's going to do it for the core list of companies. Let's go back on over to the ES and make sure that we're not missing anything here for the open. Not really, still opening on that minor gap down. I would say that the risk reward may be favorable for an actual fade now, considering where we're at in relationship to the prior day's low and the overnight low, right? So keep that in mind. Once again, if that does not fit your comfort zone, if it does not fit your Friday rules strategy, then you're just going to wait for the resolution of this gray box. If we start getting dramatic price acceptance underneath, lower highs are shortable into the 66 level. That's right down here, 66. Remember that is multiple Fridays ago high. That would be the target. And if we do sweep and come back in, higher low inside, I should actually draw that differently. If we go gap fill, minor reversal, and then higher low into the prior day's range right here, remember that is likely going to be the strongest long indication. It's probably easier to trade on something like your NQ. Right? If you look at the NQ, we get the downdraft first, right? Higher low back inside, good to go. I know when I said inside and didn't even draw the drawing out, but you get the gist, right? So that is going to do it for the pre-market prep. We have 9:25 on the clock. Do me a favor, hit the thumbs up button on your way out. Remember, the Friday rules are the most important thing this morning. Friday rules in combination, I should say, with the understanding of mindset, right? Prior day, really strong close. This morning, pretty weak looking open. So we got to be prepared for that. All right. Any questions, comments, concerns in the chat before I shut it down for the morning session? I'm just going to scroll up here and see what's going on. Good morning, JL. I think I missed you on the good morning shout outs, but thanks for being here. Mickey, of course. What else? Have a good weekend. Yeah, thank you, Charlie. I hope you guys have a good weekend as well. Sincerely, right? I hope you have a fantastic weekend. Enjoy some time away from the screens. We're coming into that very festive, very patriotic time of year, 4th of July. So hopefully you've got good and fun things going on wherever you're at. Paul, nice to see you. Good morning. Have a great weekend. A lot of people are asking for Bitcoin. David Mastriano, we will look at DE. I missed you yesterday. I saw your chat, but I missed it. So let's take a look at DE for David Mastriano. What's going on out of DE? DE. Let's clear that level up and just take a look at the daily first, and then we'll keep drilling it down. So DE, strong move here out of DE off of these lows. And a daily inside bar has formed. So this is a daily 3-bar play, right? You would classically look for a breach of those highs for continuation in the upward direction. Your next overhead target gets to be somewhere up here around 431.75. So plenty of upside room to run. The only issue is you're buying. Well, maybe you're not buying because maybe you do or do not have a position. But if I'm looking at this from the perspective of not having a position, blank slate, right? I see this setup and I think, okay, this is bullish, but I see the context of the location, 100% retracement, and I think, probably don't want to be a new money long here. In the pre-market, we're already opening underneath, or the intended open is to be underneath the prior day's session. So that does strike me as a bearish opportunity for sellers to step up and perhaps get a deeper retest of the prior breakout point. Now, the most optimistic thing that could happen out of DE would be a pullback that supports there. We build out a longer term flag, something that looks like this, and then over time we get a break higher low and do something like that to test your 431.72. That would be the optimistic view of DE from a bullish perspective. If you're looking for a short, yeah, I would say that maybe, because of the location here, I don't know what your time frame of execution is, but if you're looking at the daily chart and you see this spinning top at resistance after a 100% retracement, wouldn't call you crazy for looking for a short stab here to try to get some of the pullback move. Just understand that you're shorting into incredible strength on the daily rally, right? So that's really it. The main levels that I would have in focus, and then 400 obviously is downside support as well. But 418.20s, 408 even, and then 400 even. Those are your downside levels. And so far it looks like opening underneath yesterday's low that you would usher in the pullback to test 408. Watch for the reaction here. That would be the primary thing I would watch for on the open today. Hopefully that answers any questions you had about it, and hopefully we've taken care of that. All right, TP Wave, nice to see you. Do I take vacation? No days off. Team, no days off. All right, I think that's it. Appreciate everybody coming out to the show. Once again, have a great, fantastic weekend. Do something fun, and I will see you in the next one. Join the Discord if you're not in there already. It's completely free. We just chat about market happenings. All right, adios. I will see you for the weekend update. Have a good Friday. Stay green.